Hello friends, so we are starting today with questions on marginal costing. Some concepts we did in the last session which included meaning of contribution, income statement under marginal costing, profit volume ratio, break-even point, margin of safety, the formula for computing sales desired to earn desired fixed profit. These are a few small things that we have discussed in the earlier session. Today we are starting with the questions. The first category of questions is A category, which has lots of questions, around 39 questions, which are on basics. All types of questions, easy questions, difficult question in this category, and this is the base of this topic. The 39 questions are very, very important for your understanding of this topic of marginal costing. So I'm starting with the first question there. Question A1. It's a very easy starting question, very small, easy 2 marks question. The profit volume ratio of a company is 50%. The profit volume ratio is given %50. You know the formula for this. Contribution divided by sales into 100 is equal to 50. Second thing given, margin of safety ratio. It is given at 40%. Once it is given in percentage, you are going to apply the percentage formula. Margin of safety in units divided by actual sale in units into 100, or margin of safety in rupees divided by actual sale in rupees into 100. Question gives me sales volume in rupees. Question gives me sales. Sales obviously is actual sales. It is given at rupees 1 lakh. So what I can compute from the two formulas? First formula, I can get contribution 50,000. Not needed at the moment. I require to compute net profit. Net profit will not come from there. Second formula, MOS percentage is MOS in rupees divided by actual sale in rupees into 100. So from there I get MOS in rupees. This is equal to 40 divided by 1 lakh into 100. And if I compute from there, I get MOS in rupees. $40,000. Now, what are formulas of MOS in rupees? One formula is actual sale in rupees minus break-even sale in rupees. Another formula is profit divided by PV ratio. I want profit. This formula will be of immense use here. This is equal to profit divided by PV ratio. Now this PV ratio I know. This is given at 50%. Question wants me to compute profit, so I get profit easily from there. Profit is rupees 20,000. There can be many other ways of computing, but figure will be exactly same. Profit will be rupees 20,000. Whatever method you apply, I could apply different formula of MOS, actual sale minus break-even sale. From there, I could calculate fixed cost, contribution I compute from PV ratio, and contribution minus fixed cost will be profit. Answer will be same. I am using the easiest way to do, but alternative ways are always welcome. You can apply alternative formula. Your answer of profit has to be same 20,000. If you get a different answer, certainly you are doing something wrong. They are all formulas leading to same answer. Profit will be 20,000. A2. question A2 is not a small question, but still a very simple question. It is basic out of these basics question, which is A2. It tells you a data, asks you basic things like break-even point, PV ratio, profit loss, and if there are changes in the basic data, what will be the change in break-even point and other things that is being asked in this question. I go through the contents of this part by part. I'm going to do is part A. In part A also there are multiple requirements which I am going to deal. First thing wanted is break-even point in units, then is break-even point in value, then there is some profit or loss asked. I'll go by one. First requirement is what I am doing here. What is the formula of break-even point in units? You must remember all the formulas. You'll be easily able to do the questions if you can recall the formulas. Break-even point in units is fixed cost divided by contribution per unit. The fixed cost is given in question, even added up there, rupees 3,60,000. Rent, salaries, advertising, other fixed expenses, they are all given under the heading annual fixed expenses. The aggregate is given there 3,60,000. So numerator I have got 3,60,000. What is contribution per unit? Selling price per unit minus variable cost per unit. Question gives me selling price per unit on the top 30 rupees. In the table, first item is selling price. 30 rupees is the selling price. And variable cost, it is telling me 19.50 and salesman commission 1.50. Total is 21. 21 per unit is variable cost. These are both per unit. 30 minus 21 gives me contribution per unit. So from there I am getting 3,60,000 divided by rupees 9. It makes 40,000 units. 40,000 units or 40,000 chappals, whatever you call it. The unit of measurement is chappals in this question. In part A, second requirement, break-even point in rupees. One easy formula that you have done, fixed cost divided by profit volume ratio. In short, we call it PV ratio. I need to calculate that PV ratio, profit volume ratio. What is PV ratio? One of the formula, contribution per unit divided by selling price per unit into 100. That is 9 divided by 30 into 100. This is 30%. 30% is my profit volume ratio. On every 100 rupees, there is a contribution of 30 rupees. That is being told here. Now, applying the formula, 3,60,000 divided by 30%. Now, be very sure, 30% implies 0.30. Don't write it divided by 30 in your calculator. 3,60,000 divided by 30 nahi karna. What you are going to do is 3,60,000 divided by 0.30 or after 30 push percentage button. That will give you the correct answer. So the answer is rupees 12 lakh. It is verifiable. 40,000 units sold at the rate of 30 per unit will give you 12 lakh rupees break-even point. At this level, they will start earning profits. A part is still not over. In A part, third thing wanted, Determine profit or loss if 35,000 pairs of chappals are sold. At 35,000 units, think about it. Will there be profit or loss? At 40,000 is break even. Less than 40,000, it has to be loss area. So you're going to compute loss at that point of time. How do I compute it? I prepare one income statement. Simple income statement. Sales revenue 35,000 multiplied by 30 minus variable cost 35,000 multiplied by 21. After subtracting, what I get is contribution minus fixed cost 3,60,000. From there, I'll be getting the loss figure. So what I am getting there, let us compute. 35,000 multiplied by 30. I am getting 10,50,000. 35,000 multiplied by 21. I am getting is 7,35,000. Once I reduce, I am getting is 3,15,000. And my fixed cost is 3,60,000. So what I am getting? Profit is minus 45,000. Or I can say loss of 45,000. So certainly, when your break-even point is at 40,000 units, at 35,000 units, you are going to have the loss only. That is being indicated here. 45,000 is the loss. So, very simple concept to follow. Income statement will show profit if you make and sell more than break-even point units, means more than 40,000 units. Less than 40,000 units, there is going to be a loss, which is what we have computed at 45,000. Now comes part B. The part B makes some changes in basic data. Part B makes some changes in basic data. Let us read the changes. The sales commission are proposed to be discontinued, means revised VC per unit. What is VC? Variable cost per unit. 19.50. Because sales commission will be discontinued, 1.50 will be saved. Instead, fixed amount of 90,000 incurred in fixed salaries. Revised fixed cost. Earlier fixed cost was 3,60,000. Now additional 90,000 will be there. So 4,50,000 will be revised fixed cost. 3,60,000 increased by 90,000 makes 4,50,000. Reduction in selling price 5% proposed. Selling price per unit reduces by 5%. 5% means rupee 1.50. 30 into 5%. 1.50 is reduced, means revised will be 28.50. This is 30 minus 5% of that. That makes 28.50. What does question want? Question does not want everything. He wants revised break-even point only in units. So revised break-even point in units is equal to revised fixed cost divided by revised contribution per unit. 4,50,000 divided by 28.50 minus 19.50. That is again 9. If you note carefully, the loss caused due to reduction in selling price is offset by reduction in variable cost. but the fixed cost has increased. That is why the break-even point will increase. Is a higher break-even point good or bad? Answer is bad. It is a starting point of profit. I will start earning profit later in my business by selling more units. That is not a good thing to happen. That is a bad occurring of the business. So what I am getting is 50,000 units. That is revised break-even point in part B. Part C. It is proposed to pay store manager 50 paisa per pair as further commission. Again revised data comes. You are paying him commission earlier 1.50, now you are going to pay 50 paisa more. So variable cost per unit will become rupees 21.50. Earlier was 21 original data. 50 paisa more. So it becomes 21.50. The selling price proposed to be increased by 5%. Selling price is going to be increased. Earlier was 30 plus 5%. Implies 31.50. Did he talk about fixed cost? No. Means fixed cost remains same as original one. Fixed cost 3,60,000. Now there is a benefit implied. Your variable cost is increasing by 1.50. Sorry, variable cost increases by 50 paisa only. Selling price increases by 1.50. There is increase in contribution by 1 rupee. No change in fixed cost. Break-even point is going to decline. So revised break-even point. $3,60,000 divided by 31.50 minus 21.50. That is 3,60,000 divided by 10 rupees. This is 36,000 units. This is part C. Part D. It's a different part. Let's try to understand this. Refer to original data. We have always referred to the original data. If the store manager were to be paid 30 paisa commission on each pair of chappal sold in excess of break-even point, 50 paisa per unit is variable cost, but you will pay this cost only once you have reached break-even point. What will be store's net profit if 50,000 pair were sold? Now it is simple. Original break-even point 40,000 units. Refer to A part, original data. We computed break-even point 40,000 pairs. Excess of break-even point 10,000 units. Total are 50,000 units. So excess of break-even are 10,000 units. Now it is simple. My variable cost is different at both levels. For first 40,000 units, it is 21 per unit. For next 10,000 units, it is 21.50 per unit. So I need to make income statement for this. I need to calculate profit arising out of this situation. My contribution per unit is not constant. Till break-even point, it is 9. After break-even point, it is 8.50. So remember, there is some differentiation. I am not making category by category income statement. I am making clubbed income statement for 50,000 units. Sales revenue 50,000 units, all sold at same rate, which was 30 per unit. ₹15 lakh. Variable cost 40,000 into 21, 10,000 into 21.50. I need to get total of this. 40,000 into 21 makes 8,40,000. 10,000 into 21.50, it makes 2,15,000. When added, it is 10,55,000. When reduced from 15 lakh, I get contribution 4,45,000. Will there be profit or loss? After 40,000, there has to be a profit. Minus fixed cost. 3,60,000. What I am getting? 85,000 profit. Now let me tell you, there are shortcuts to verify this also. Till 40,000, no profit, no loss, break-even point. After that 10,000 units, you are getting contribution of 8.5 per unit. What is 8.5? 30 minus 21.5. 8.5 per unit on 10,000 units makes 85,000. That is a checking that I can do in this question on my own. I hope this one is clear. Next, question A3. A3 is another very simple question, basic question having many parts, but nothing difficult. Very straightforward type of things. So looking at question A3. A retail dealer in garment is currently selling 24,000 units of shirts. He supplies the following data: selling prices, their variable costs, their fixed cost, 3 are given, we'll add them, we'll get total variable cost. Let's go to first part. First part requirements. Calculate break-even points. When he says break-even point, I compute both in units also, in rupees also. So break-even point in units, fixed cost divide by contribution per unit. So fixed cost, I add 120 plus 80 plus 40, 2,40,000. Divide by contribution per unit, 40 minus 25, 15. 2,40,000 divided by 15. So I get 16,000 shirts. Units or shirts, one and same thing here. That is in units. Break-even point in rupees. Fixed cost divide by PV ratio, profit volume ratio. First I compute PV ratio. (15 divided by 40 into 100). Contribution per unit divided by selling price per unit into 100. Into 100 for percentage. 37.5%. Break-even point in rupees, 2,40,000 divided by 0.375. This is rupees 6,40,000. So very easy application of formula. First part, 2 requirements I have computed. There are more requirements in first part. It wants margin of safety in sales revenue and number of shirts sold. MOS in units, MOS in rupees. Simple formulas to be applied. First formula I'll use. Actual sale units minus break-even point in units. Actually, how many units they are selling? First line of question told me 24,000 units. 24,000 units minus break-even point I just computed above 16,000 units. $8,000 units. Last requirement of part 1, MOS in rupees is equal to actual sale in rupees minus break-even point in rupees. Actual sale is 24,000 multiplied by 40. 24,000 units sold at the rate of 40 per unit. Minus break-even point rupees 6,40,000. This is 9,60,000 minus 6,40,000. Rupees 3,20,000. That is MOS in rupees. Part 1 is complete. In exam you get such a question, 4 parts are there, 8 marks are there, lots of calculations. So lots of calculations, they will give you such 8 marks. Second part of this question, the part 2 wants making of income statement at 20,000 shares. My question remains same. At 20,000 shares, will you get profit or loss? Break-even point was 16,000. At 20,000, certainly you will be in a profit area. So I make income statement of this part 2. Sales revenue 20,000 multiplied by 40. 8 lakh minus variable cost of sales 20,000 into 25, 5 lakh contribution 3 lakh. Fixed cost 2,40,000. Profit I will get 60,000. So very simple computation. If I am getting the question for 8 marks, this part is of 2 marks, they are free 2 marks. Very easy 2 marks. Third part, they start making some changes. Part 3, I observe some revised data here. If it is decided to introduce selling commission of 3 per shirt, once there is per shirt expense added, means variable cost will increase. Revised VC per unit 25 plus 3, 28. How many shirts are to be sold to earn net income 15,000? Desired fixed profit 15,000. DFP is desired fixed profit. I have given you formulas for this. For desired fixed profit, the formula to be applied. So what was formula? Sale in units to get desired fixed profit, fixed cost plus desired fixed profit divided by contribution per unit. It can be solved by using algebra also. By assuming sale units, desired sale unit to be X, we can do the same thing. This is 2,40,000 plus 15,000 divided by 40 minus 28. 2,55,000 divided by 12. I get 21250 units or shirts. Part 4. Again, some changes are being talked here. He says additional staff salary 33,000 anticipated. So that increases my fixed cost. Revised fixed cost 2,40,000 plus 33,000. 2,73,000. Price of shirt likely to be increased by 15%. Selling price per unit 40 plus 15%. 40 plus 6, 46. What should be break-even point in number of shirts and sales revenue? Your variable cost per unit remains constant at rupees 25. Have to compute revised break-even point in units and also in rupees is equal to revised fixed cost divided by revised contribution per unit. 2,73,000 divided by 46 minus 25. 2,73,000 divided by 21. That is 13,000 shirts or units. Now for revenue, revised break-even point in rupees, revised fixed cost divided by revised PV ratio. Revised PV ratio 21 divided by 46 into 100. 21 divided by 46 into 100. Now it is coming in fractions. Make sure you are not going to approximate. 45.652 dash 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 percentage. Dash 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 means I'll consider till the end. Keep it in memory. You'll be able to use behind the fixed cost revised. 2,73,000 divided by 0.45652 dash dash dash. 2,73,000 divided by this memory recall, I'm getting rupees 5,98,000. The moment you approximate, you will get error of few rupees. That is not acceptable at CA level. Approximation errors cost lots of marks in the exam. If you are not going to take that risk, be sure that you are doing all calculations to the perfection. Rupees 5,98,000 is perfect answer there. It can be verified. 13,000 multiplied by 46 per unit makes 5,98,000 rupees. So break-even point revised is computed on the basis of changed terms which were given to me.